Hey traders, Todd Gordon of TradingAnalysis.com. Happy Tuesday ahead of Fed Wednesday. Hopefully it will give us a little shot of volatility that we need, especially the FX markets, because they could use it. They are a little quiet right now, but I think is interesting and poised to move tomorrow around the Fed is dollar yen, and I see it as testing some key technical support levels. Okay, so to start, we see this 101.50 level. This has kind of been the pivot through 2013, and we've tested it. Maybe it was broken as it was supposed to be resistance. It was broken. It's coming back to serve as support once, twice, three, four times, lady. Oh my God, I'm such a bad singer. I'm sorry. Four times. Usually triple bottoms don't hold. Quadruple bottoms hardly ever hold. So I think this is going to break and come down and test trendline support. Depending on where you draw the trend line, the way I have it drawn now comes in about 100.5 in dollar yen. If you can move it around a little bit, I think drawing trend lines is very subjective. You don't know where the level is. I guess drawn this way, it's up around 101, so who knows? But I do think we are what is not objective, or sorry, what is not subjective, but is objective, is this was a three-wave move to new highs in Elliott. So that means that's a correction. Okay, that is not the start of a new uptrend, and this is the reaction you'd expect to see following a three-wave move to new highs. So I think we're going to get down eventually through that trend line support, wherever the support comes in between 101.5 and 101, get down to about the 97 area, and eventually down to this cluster of Fibonacci support at about 93. So we could see some pain in dollar yen, and bad news for stock longs. Okay, if you see a falling dollar yen rate, that means the dollar's weakening and the yen is strengthening. Both are not good for global equities. A falling dollar right now is not good because that means the Fed is kind of losing the battle, and a strengthening yen means the Bank of Japan is also losing the battle. So strengthening yen is generally inversely related to stocks. So if the yen strengthens, stocks sell off. Okay, so heading into tomorrow, let's move down to a 3-hour chart. Let's pull in the next couple different Elliott degrees. Okay, so I see this down to the 3 hours. 1, 2, 3. Wave 4, we could have another move up in wave 4 at about 102. So look to be short between 101.5 and 102. Traditionally, guys, you'd have to put a stop loss up around wave count and validation, which is a little rich for me. 102.65. So generally what I like to do is put it above this orange level because usually wave 4s don't get above that level. So 102.33. Okay, so maybe like a 102.40 stop against a 101.5 and a 102 entry. Downside would be 100.75 and 100.5 for the rest of the trade. So again, we want to be short dollar yen. We're going to have to fine-tune our entries a little bit heading into the Fed. It's a little too dicey to pinpoint the exact entries. We want to see how the wave count unfolds overnight before we can identify the exact count. But again, look for 101.5, 102 for the move down to 100.5, which should be accompanied by lower stops. So good luck. Hope it helps. And good luck in the Fed announcement. See you guys tomorrow.